Hey, good morning, everybody. This is Chris here with BNFX with your New York Open analysis and kind of a review of the week ahead here as we get kicked off on Monday. Looking overnight, it really was more of a risk-on environment. I'm kind of starting from scratch here for this week just to show you kind of my walkthrough for a day. I look at the Scotiabank breakdown here. This usually tells me kind of what's going on here as New York gets kicked off. Commodities are retreating as the consensus in the market right now is there's a positive pro-risk tone with Russia and Ukraine at least talking, which is good. There is some concern that Chinese companies will be exposed to some sanctions, as the word was that Russia had asked China for some equipment for the war, for war help. So that's something to keep an eye on. We've got FOMC this week, which is our Fed rate, and the 100% consensus is that they're going to raise rates and really set a hawkish tone for the week. So that is kind of what we're looking at right now. But Aussie losing ground with the commodity retreat so far. US dollar, although it's retreating slightly, is anticipated to be strong as the week kind of goes on here with Fed and also with potential developments with the geopolitical situation. So those are the two main things that we have going on right now. Canadian dollar probably retreated a little bit with a drop in oil. But once again, the oil's dropping as there's a pro-risk mood. But what you got to look at is you got to look at what's really going on in the market. You got to look past that short-term move here. And this is why I have that oil trade on. I could always be wrong, so it's not 100%, but these sanctions and the denial of Russian oil, no matter what happens with the Ukraine-Russia situation, those are there, and that's going to impact the market for at least the next 6 months to a year. So although you're seeing a drop in oil a bit here, that's not going to last. Okay, we're getting into summer, which tends to spike oil prices anyway, as countries stockpile for the wintertime. But also the sanctions and the soured partnership between Russia and the Western countries, that's going to impact oil prices, particularly in Europe. Okay, the US is not exposed quite as much, only getting 10% of their oil from Russia, but you're going to see some moves in oil, in my view, like I said, and that's why I have that UK oil trade here. So I'm going to show you that real quick here, and we've seen a little bit of a drop, but that's why you got to give it a little bit of room to breathe here. Otherwise, you're going to get shellacked. So this is the trade we have right now. So you can see it's taken out all this liquidity down here. I don't anticipate it going down into the 90s here. There's going to be stiff resistance at the $100 level for UK oil, in my opinion. So this is what we're looking at. It's going to take a little while to play out, but like I said, I anticipate this moving on. It's a 3-to-1 reward to risk here. And we're swinging for the fences on this one. So we'll see what happens. But that's what we're looking at right now. In terms of other trades today, what I'd be interested in is a short-term risk on move here. I would be interested in Canadian dollar trades as well. Because like I said, even though there's this pullback here, I think that would be a smart move. The Canadian economy is just stellar with that jobs report from last week. So Canadian dollar strong, US dollar I'd be looking at for a slight rebound. Commodity currencies I'd be looking at for a slight rebound as well. The euro is starting to move up, but I don't know how long that's going to last. So that's kind of what we have for today. In terms of the week ahead here, we've got CPI for the Canadian economy on Wednesday. Retail sales not really going to make any difference for the U.S., but the funds rate, the Fed rate on Wednesday, that's going to be huge. So I think everyone's already anticipating the 0.25% raise. So what you're going to see is the announcement. You're going to see the dollar drop, and then you're going to see what Powell says. Spike it back up. That's kind of what I'm anticipating. We've got GDP for the Kiwi. That'd be early in the late New York session, early Asia. We've got unemployment for Australia on that Wednesday as well. Thursday, we've got the UK official bank rate, and they're anticipated to raise a 0.25 point as well. So we've got a couple we've got a couple central bank announcements this week, so this is going to be a busy week for us, and then not to mention any developments with the situation in Ukraine. So stay tuned, and we will start scanning charts and looking for something on, like I said, Canadian dollar for today. So stay tuned, and I'll catch you guys later.